Hey, ladies and gentlemen, welcome to Beat the Banks, our free community trainings that we do every Friday, 3 p.m. Eastern. It is 4 p.m. Eastern because, well, let's just put it this way. I run a show called Beat the Banks, and I'm on the phone with banks dealing with things all the time. Really appreciate you being here. Okay, let me see here. All right, so we're live on the arena. Today we're going to be talking about stablecoins. I apologize for the quick delay. Just got to make sure we get all of this out to our audience on Facebook, on Farcaster. I keep forgetting to log back into CoinMarketCap. I'll do that in a minute. Later, something. I also want to shout out everybody with the fam at On-Chain Media. Okay, so let's go. Let me pull up my... If you hear any big noises in the background, that is annoying, and that is also because it is July 4th. So if you're in the United States, happy July 4th. Today's, I guess, for many people, the day that they are going to be celebrating the observing of July 4th. It's a federal holiday today, actually. So shout out to all the federal workers that are out there that have today off. Okay. Let's bring up the screen. So on Wednesday, shout out to Logan, who's on panel. The interesting part about Wednesday, let me make myself brighter because I realize the light behind me is causing me to not be as bright. But big news on like technically it was the 30th, so Monday, right? Stripe decided to come out with their own version of a stablecoin. Now, we've talked about this on our Wednesday podcast, which is called Total Value Locked, where we have a panel that comes each week, and we talk about the news that's happening in the world of DeFi, blockchains, digital assets. This is not new news if you're a regular person who watches the show, because this is something that's been kind of in the works for a little bit. The interesting part here are the businesses that have signed up to use OpenUSD. So to quote Zach Abrams, the founding CEO of Open Standard, and again, this is a Stripe product, Stripe being really one of the first businesses to really disrupt traditional e-commerce. The way that it worked with their founder, and his name is escaping me at the moment, 7 lines of code allows anyone with a website to accept payments with any payments that you have out there with regards to credit cards, right? Credit cards, debit cards, and recently, if you have Link, which is also from Stripe, there you can connect some crypto pieces that are there. It's a little bit of a pain in the butt, but it does work. I can tell you this through our partners at Awaken.tax. I paid for my taxes this year, my tax report generation using USDC, which is great. However, with OpenUSD, they're making it the default for businesses using stablecoins on Stripe. Now, what's interesting is that this news actually dropped Circle stock, who is the caretaker of USDC, by 14 to 19%. It was a pretty large one. Interesting also, Coinbase is large minority owner of Circle. Not Circle, but of the USDC project. It was a joint venture between the two. So, a lot of people, a lot of fintech, a lot of multinational banks are using this. So for people who still think that what we talk about is not real and that it is quote unquote funny money, well guys, that is definitely not the case. Because all of these countries and companies, Visa, Stripe, MasterCard, American Express, Discover, Fiserv, Adyen, Cloudflare, Corpay, Jack Henry, I'm not going to name them all, right? Western Union's here as well. Obviously, PayPal is not going to be here. But Ripple is. MoneyGram. Interesting that Ripple is, because Ripple obviously has their own stablecoin called RLUSD. But all of these international groups will also be using it. However, there was some pushback today. Samsung and a couple of other South Korean groups said that they were never consulted on this. And I think someone's lying. And I don't know if it's Stripe. It caused Jeremy Allaire, the CEO of Circle, to talk about integrity. So, could be that two hands don't know what they're saying to each other, per se, which is not shocking. However, while this is all hunky-dory, there are other groups who have created stablecoins like this previously. So the idea is that, and the main reason why OpenUSD, and really just Genius, in terms of the Genius Act in the United States, really got pushed, in my opinion, is because Tether, who is the company behind USDT, and if we look at USDT, let's go here. Sorry, this is from a call that I had with my membership. CoinMarketCap. Tether briefly flipped Ethereum in market cap last week amidst all the volatility. $184 billion in market cap. I believe in 2024 they cleared more than $10.5 or $11 billion in profit. Tether is only, well, they're bigger now, but at the time they only had less than 20 employees. So the profitability of Tether and what they were doing really showed a lot of businesses that stablecoins are a real thing and they can be very profitable. That led to what became the Genius Act, which was passed in July last year, and has really really changed the way we look at stablecoins, I guess, from a mass perspective. For those who have been in DeFi like myself since early 2020, late 2019, this is not news because USDC was a thing back then. So was Tether, which is USDT, and so was DAI, DAI. There's a couple others that are out there as well, and we'll talk a little bit about that in the history of stablecoins. But for those of you who may be watching and you're like, yeah, it's a stablecoin, so what? Do you really know what a stablecoin is and how it became what it is today? Because the hope, and I'm going to shout out Patrick at NGMI from DeFi Llama. The stablecoin market cap now is roughly about $300 billion, 311, with stablecoin dominance at 59%. This number for Tether used to be more than 75. So the number is dropping. There's going to be a point where this number drops below 50, and whether USDC does that, whether Tether does that, whether OpenUSD, whether USDE from Athena, or some of these others, the days of Tether being the dominant force, I think, is going to go by the wayside. There's something that we were talking about on Wednesday, and I apologize because I'm not going to have it, but there was a study that was put out that in quarter one of this year, Q1, 3, no, 30, was it 3 or 30? 3 trillion, we'll just go with the conservative number, $3 trillion of stablecoin transactions were done. That sounds about right, 3 trillion. Of that 3 trillion, 80% of that was from USDC, which is from Circle. Not saying that there's anything going on weirdly with Tether, but a lot of people are just using Tether either on exchanges or it's being staked. It's being used. Or it's being, in the case of Tron, it's just being held there with more than $89 billion of stablecoin market cap. And most of that is USDT. So it's interesting to see that, trillions of dollars of stablecoins were transacted between wallets, between smart contracts, all of that in Q1 of 2026. Again, to everyone who thinks crypto is fake, should be an eye-opening number for you. I've been in this business for a while, and that was an eye-opening number to me. So, I did put together a couple of things about, what are stablecoins. And we'll start with this one. You know what? I actually asked Grok to give me an actual message because we're in the age of AI, right? You don't have to listen to me. Go ask Grok. I prompted Grok with the actual message for outline to me what makes a digital asset a stablecoin, because stablecoins are digital assets. They're not crypto coins. I want to make that abundantly clear. Yes, there is cryptographic hashes behind the encryption on the technology. But for me personally, when I think of a crypto coin, I think of a proof of workflow for validating transactions on a cryptographic coin as crypto. And really, Bitcoin, Caspa, and a couple others are really the only real crypto coins left. Everything else is a proof of stake or some type of proof of liquidity model, which to me means that they are now digital assets. So using the word crypto to describe everything is and will continue to be an old concept, an aged, just a dated concept. This is the best way to describe it. So I did ask, what are the core elements that make a digital asset a stablecoin? And we'll talk about this in the context of the Genius Act and everything else as well. So a stablecoin is a digital asset, a synthetic digital asset, right? Meaning, technically not, because you can get native, so it's not necessarily synthetic. But it is an asset, a digital asset that maintains a fixed exchange rate to another fiat currency is the best way to describe it. They say to a reference asset. The most common stablecoin that we see around the world right now are assets that are pegged to the value of $1 US. Meaning one stablecoin equals 1 USD. And there are a variety of stablecoins that are out there. USDE, USDT, USDC, all pegged to the value of the US dollar. There's others that are out there. Shout out to Jupiter for JupUSD. PayPal for PayPal USD, PYUSD. Paxos, who has the Global Dollar Consortium, for USDG. There's a whole bunch of different stablecoins that are out there. There's the American version of Tether, USAT. That's Genius compliant in here in the United States. There are other fiat currencies that have stablecoins. I shout out the old Jarvis Protocol project. They have J stablecoins for everything, roughly. About the majority of the world's fiat currencies have issuance of stablecoins behind them. The euro, the Chinese yuan, Japanese yen, all of, even now the South Korean won. Shout out to the project for that on Avalanche. Those are specifically fiat-backed stablecoins. Now, there are other types of stablecoins that are available, but before we get to that, what also is important about stablecoins is what maintains their value, kind of like the US dollar. What maintains the US dollar? How does it stay afloat at equaling a dollar? So you have what's called the stability mechanism uh, to help maintain the peg, which is the fixed exchange rate to that. And I'm really just speaking to you about this because, again, you can look this up yourself. I'm speaking about this to you as a translator of all this new technology. So if you know anybody who doesn't know anything about stablecoins, please feel free to show them this video, this stream. Happy to explain that. I'll most likely make a short about this. So stability mechanism using smart contracts, governance, any type of off-chain, either treasuries or oracles, things like that to help maintain stability, is very important for defending the peg, right? And you have that either through expanding or contracting supply, any type of arbitrage incentives for even like MEV bots or just traders in general to keep that stability alive. And then the most important part, either the backing reserves that define how the liquidity of that is backstopped, or in the case of certain other coins that we'll talk about, algorithmic rules that help maintain both the supply and the peg for the stability overall of the stablecoin. Now that that's taken care of, transparency and verifiability. This should be standard for every digital asset, not just stablecoins, but having audits, attestations, on-chain transparency, and regulatory compliance. These are all things that are required and mandated by the U.S. Genius Act. There are other acts across the world for sovereign nations that also provide various things for this. Now, to their credit, back when they still did BUSD, which was Binance's USD stablecoin, this was something that was sunset, 3 years ago now? Because Paxos also does PayPal USD, and they do USDG, and a couple others. Yeah. Attestations just means that they're showing the on-chain reserves. They're providing monthly reports on that, and Paxos always very good at that. Circle, to their credit, also very good at providing monthly reports, and you can look them up with audits on both the reserves and the processes that are roughly around that. Now, with that said, with regards to the smart contracts on stablecoins, pardon me, they're very straightforward. They do so. One thing I will say, and this may scare people, this is technically programmable money. It just is. Most digital assets are programmable, meaning that they have the ability to blacklist and freeze funds on various ecosystems. Tether is apparently very loose with that definition, where Circle is like, we'll only do anything if you have a judgment order given, which is, yeah, there's that. But this should become a little bit more of a tighter environment as we move forward. Blockchain native. So that's the other part too. Native coins for these are issued as tokens across multiple blockchains, generally through a central authority and then bridged. Circle has done a masterful job of building out their specific CCTP or cross-chain transfer protocol bridges from their off-chain reserves to mint USDC and send it out. Same thing for Tether. They have their native Tron. You used to be on like 4 chains. Now there's quite a bit more. Arbitrum is actually which is the layer 2 in the Ethereum ecosystem, is the hub chain now for USDT0, which is the native cross-chain USDT. And of course, they are regular digital assets in the crypto or the blockchain ecosystem, right? So they are anti-fragile, censorship resistant, cross-border, and fairly fast at settlement. When I say fairly fast, meaning almost near instant. I can't say instant because it's not. They're also generally free and cheap. For those of you who have followed my content for years, you know that I do not really support bridging assets to different blockchains. I am a more big proponent of converting those to a stablecoin and then bridging a stablecoin over, mainly because slippage, right? Pricing oracles, liquidity mismatches, stuff that can be very painful, if I'm being very honest, and things that you don't necessarily want to do. Blockchain native, where did that redemption? So redemption, that's the biggest thing, where if you're going to redeem your USDC for your own local fiat currency, you can do that. Convertibility also is something where you can just swap it and put it into an asset you can redeem. So on-ramping and off-ramping, really big parts of the puzzle that need to be solved for most people. And I think this is a fairly good definition of the big issues, that they sit at the intersection of traditional finance, which is stability, and crypto, which is decentralization and programmability. So having the ability to have all three is something that honestly probably fairly done well by RWA stablecoins. USDTB from Athena is one. USYC for treasuries from Circle is another. There's a couple that are out there. They're fairly specialized, but RWA stablecoins, of course, are referencing U.S. Treasury bills as their backing. Let's talk about, and I've given this presentation before, guys, because I have a deck like this for Beat the Banks that I gave 3 or 4 years ago that I've reused. So I'm just using Grok just to show you that this is probably the most up-to-date version. You can look it up yourself. I'm no rocket scientist. But the people who designed this are, I'm pretty sure they're great. So USDC, USDT, they're what we call fiat collateralized, meaning that they have off-chain reserves. USDT used to come into question because apparently USDT was backed by commercial paper, specifically Chinese real estate, like Evergrande and stuff like that. That's not the case anymore. They are very transparent as to what their reserves are now. Thanks, shout out to Paulo Arduino and team. And it's much less of a question. In fact, Tether is, I think, the 18th largest holder of treasury bills in the world, meaning U.S. debt. And most of the reserves are T-bills. Gold, they're one of the largest holders of gold in the world for tokenization. They even have their own coin, XAUT, specifically for that. And then there's also Bitcoin as part of their holdings as well, to help maintain a strong off-chain reserve for that. And their attestations that they do monthly show that. The other type, which is one that's fairly common in DeFi, in decentralized finance specifically, especially in blockchains, is over-collateralized stablecoins. So in order to mint a specific coin, shout out to Liquidity, which is Bold, the V2, you can actually have a stablecoin that's backed, but you have to provide like 130% of reserves in order to do that. DAI is that way too. You can provide over collateralized ETH, which is now USDS, to mint USDS or DAI. What's good about this is generally done on a blockchain. ETH mainnet's generally the easiest to put on there. Now that everything's cross-chain, makes things a little bit easier. It can be sensitive to DPEGs, specifically if there's counterparty risk, right? So MAI has that specific DAO has had some issues, right? Across multiple chains. Shout out to them though. Which is QiDAO, by the way, QiDAO. Ultimately, the ability for the backing issuers to stay relevant, afloat, and liquid maintains how well, regardless how decentralized their protocol is, of them continuing to have these coins. Commodity backed, I just mentioned Tether Gold, Pax Gold as well. I don't love real estate as a commodity backing. There are several out there. Most recently, Anzin, which is what USDZ. Uh, Mainly because the real estate in question generally are distressed and renovated properties. And let's say we go through a housing bubble like we did in 2008 that affects the entire globe. Uh, then your stable coin that's based on that's going to depeg pretty quickly. So that's the difficult part, and that's why fiat collateralized still is the strongest it's out there. But we'll see more OCFs, or rather, I want to say it's not CDL. I'm thinking of trucking. Anyway, over collateralized stablecoins probably overtake and become the norm because there is that portion of the over collateralization that will hopefully maintain pegs, but we'll see. My personal favorite, and has the most history in this space, is the algorithmic, the seigniorage, the rebasing stablecoin. They're all kind of the same, but not. They're different. Algorithmic just means that there is an actual algorithm behind how the peg and the reserves are both addressed and maintained. Frax is the best example of this. Shout out to Sam Kazemian and Frax and that team. They're really the only one that's left for algorithmic. Seigniorage, one of my personal favorite as a degen at heart. Phantom Opera, guys. Remember Phantom Opera? And the I keep wanting to call him Tron. Tomb Finance. Tomb is a seigniorage stablecoin, meaning that one tomb was equal to the value of one FTM, which was the Phantom Opera coin, the gas token. And to maintain the peg, they had an algorithmic mechanism of both shares and bonds to help keep that in balance. Shares were very expensive. Bonds were used when the peg was low to help bring it back up. It's a very clever system, right? That I personally really enjoyed. I made a lot of money. I'll be honest, on seigniorage coins. We'll miss them. We definitely miss them, but they are very high risk, right? But are they considered stablecoins? To a degree. If anyone ever wants to do a seigniorage stablecoin to the value of one petrodollar, have at it, because I'm very curious to see how that's going to work. Scaling's the big issue with those, right? In a small vacuum, let's call it with 500 million in terms of TVL, like Tomb was at one point, it's fine. There's reasons why Tomb, which still exists by the way, Tomb Finance is still a thing, thanks to Harry Ye. Is much going to be done about it? No, I think most of that's all dead in the water. Does it mean that, so seigniorage started with basis finance. Are there more things that are going to come up that could really just imitate that? Sure. It's a really good bull market model. Specifically for seigniorage, because you can use that to speculate a lot on the value of how something's going to work, especially in a good thing. The biggest algorithmic seigniorage rebasing failure, I don't think anyone will be shocked by this, is going to be Terra, right? Terra USD, also known as LUNC, lunacy. UST was the actual pairing with Luna. Algorithmically paired with Luna for seigniorage. The bank run and the attack on it really just killed it. So could have been pretty good. I did ask him to see if they could create some well, Grok needs to work on making slides because these are not great. These are not great. Anyway, let's move on to... I had Gemini make the same thing and it was much better. So, let me go with this one. Yes. Hopefully you can see this well. Let me get this 125%. So in the US, the Genius Act really made things change for stablecoins. Because the Genius Act, as part of the issuance framework, as a way to get the Clarity Act, Genius and Clarity were supposed to go hand in hand. Genius passed in July. Clarity should have passed a couple months after that, but it didn't make it there. We got to January. February happened, which was the best chance for it to happen. Then Coinbase's Brian Armstrong decided to speak up, and well, that caused that issue. And at this point, I don't see it passing this year. It'll get to the floor in mid-July once they return from recess, but the biggest focus now is the fact that the Republicans are most likely, unless something changes, unless they do something to win back the goodwill of the people. Most of these constituents are fed up with what's happened over the last 2 years, and they're most likely going to be voted out. I mean, we've already seen in a couple of primaries, they're looking to take out multiple people, even people within their own party, like Thomas Massie and stuff like that. Regardless, I'm not going to turn this political. But the Genius issuance framework meant that to have a stablecoin that's compliant in the United States, it has to be a federally licensed issuer. Generally, that means anyone who has a license from the OCC, the Office of the Comptroller of the Currency, can issue a stablecoin. Now, what's interesting about this is that multiple crypto firms or crypto-facing firms applied for and got a license. Circle, Coinbase, Ripple, Paxos, World Liberty Financial from the president, still waiting. PayPal, still waiting. Crypto.com, I believe, got theirs. So it's a small number. Now, national banks, savings and loan groups, credit unions, all can issue stablecoins. They have to, of course, follow everything that has to be happening here, which means they have to show monthly attestations. They have to also be a federally licensed issuer. They also have to have one-to-one backing available at all times. So, the interesting part about this is that outside of groups who received an OCC license, this also meant that all of these big groups that are fintech companies could not. Visa cannot issue a stablecoin. MasterCard cannot issue a stablecoin. Amazon, Walmart, neither of them. Google, neither of them can issue a stablecoin. And that's why this is such an interesting move. Not because they created it, because Stripe has disrupted things since they bought Bridge back in late 2024, which is a stablecoin infrastructure company. Now they acquired Privy for easy access for creating wallets. And now Stripe is a huge player in the DeFi and blockchain ecosystem space. And the reason why this is going to be interesting, the Global Dollar Consortium, let me grab them. This is Paxos' stablecoin. They've already done this. This was part of what I was told was Project Guardian in Singapore 18 months ago. That was the code name for it. As you can see, there's a ton of people here. And the main reason why there's so many members is because they wanted to do the one thing that Tether's been able to do for years, which is make billions of dollars in fees. Simple, right? And that's the reason why there's all these groups signing up for OpenUSD. The reason why groups were running to figure out how to get a national bank license so they could issue their own stablecoin at some point. I don't think Coinbase goes and issues a stablecoin. They don't really have to. They pretty much half own USDC, and they're a part of OpenUSD's consortium. So when people think that's kind of weird, they're like, well, they're just trying to follow the money trail here, guys. Coinbase wants to be able to make money any way they can. Why? Because they're a publicly traded company. They are looking to appease their shareholders, right? Now, Circle has already spoken on this because this is a huge blow to Circle in a way. It doesn't help that Coinbase has joined here. But Circle has also put together a ton of infrastructure, CCTP, Arc blockchain, which will be a layer 1 blockchain around all of their smart contracts if they have partnerships with ICE, the Intercontinental Exchange, not the other ICE, which is the mother company of the New York Stock Exchange. So Circle has their hands in a bunch of different cookie jars. And we're not just talking about, fiat currency. We're talking about Forex. We're talking about derivatives. We're talking about oracles and all kinds of stuff that are infrastructure that are going to be needed for a lot of these stable coins to thrive. They're going to make money no matter what. Coinbase is going to try and make money no matter what, whether it's through USDC or through things like OpenUSD. Same thing with the Global Dollar Consortium. They're looking to make funds here because the thing about Tether making all that profit, it stayed inside Tether, and they're just one entity. All of these groups are all part of a network so that they all get a share of all the fees that come through. The only thing that kind of sucks is that there's way more than 30 than the original group, or like 13, I think the number was originally. So the share gets diluted. So yes, Tether made $11 billion in profit in 2024, and they only made $7.8 billion in Q4 2025, right? Only. But and actually, it's much less for 26. I think Q1 26 was like only 1 billion or something like that, which is still. I mean, they're investing money. They're growing the network to get more and more fees. This is the part that just makes me laugh so much about people saying crypto is fake. Guys, you guys are being left behind. All of these groups are already making money hand over fist. It may not be Tether money, but they're making money, and you're not. It's simple as that. Stripe is going to make it so that all businesses that are in the consortium will be using OpenUSD for both settlement and payment by default. And most likely, to the credit of Stripe, hopefully at cheaper rates than they charge now. Let's say they do this at 1%, game over. For merchant fees, it's a lock. Because merchant fees now are what? 2.99, 3.25%? Stripe has the power, because they own the infrastructure, guys, to make it, along with their partnerships with Visa and MasterCard, by the way. Right there. These four, Discover is now a subsidiary of Capital One. These guys are the payment network, guys. "2026 is the year of integration." We've said it over and over again on our content. There's nothing you can do to stop this train that's happening. So you might as well jump on board, even though we've been on the train for 5+ years, parroting about how this is the future of finance and the future of the way we do business. It's going to be so much easier, especially for the people who don't have bank accounts, people who are underserved, people who, are struggling to find a local currency that isn't being devalued and diluted daily. Think about people who want to hold cash. Guys, they keep printing money. The value of the US dollar continues to worsen year over year, and you holding those pieces of cotton that we call dollar bills. It's going to keep happening. Now, I keep saying that this is the new world order. I said that on Wednesday, and I kept stopping myself. But in a way, this is what it is redefining what is global money movement. That's where stablecoins have come into the biggest part. And I'm just talking about OpenUSD as a digital stablecoin. I haven't even talked about the ideas of neobanks, decentralized neobanks, online banks with on-chain adapters. That's all also coming to fruition right now. It's going to be very easy. In fact, I think it's pretty easy right now with PayPal USD. I can onboard money onto PayPal, into PayPal USD. I just have to hold it in the PayPal platform. I'm earning up to 4%. Everyone's going to be doing this, guys. This number is going to continue to drop. USDT will still probably maintain their dominance. There's not a ton of movement with USDT compared to USDC, compared to what potentially OpenUSD could be, right? But at the same time, it's like you're going to go pay for something and you're like, hey, can I pay for you in XY stablecoin? Yeah, at some point you will. The best part about this is you'll be able to have reserves, most likely on a blockchain somewhere, most likely on Stripe's blockchain, which is going to be called Tempo. How easy it's going to be to move money there. Are you going to have to KYC? Yes, you will always have to KYC if you're going to be looking to on-ramp and off-ramp. So from an anonymity standpoint, there's still some challenges that have to be met. Now, again, this was announced on June 30th. Global Dollar Consortium has been around for a long time. When I say a long time, it's relatively short. But they've been around a lot longer than the OpenUSD consortium. Has this caught on like wildfire? No, honestly. We can go look at CoinMarketCap right now. USDG is 26th with 58 million of market cap. I'm sorry, 3 billion of market cap. So it's not bad. AVAX. Someone wake up AVAX. They're getting flipped by PayPal USD and USDG. And it's up 10 on the weekly. Excuse me, my goodness. I don't know to tell you guys about that. As the background may reveal, there's a lot of fireworks going on. All right, so here's where the regulatory pressure of the Clarity Act that's not most likely going to pass. The part that's the most interesting is that the Genius Act mandated that issuers cannot earn yield or give yield to users. That's a sticking point, right? Because for Coinbase, for some of these other groups that want Clarity to pass, they don't want to be forbidden from giving users a good rate. The fact that you can hold, and earn 4% on your USDC on Coinbase, I don't think there's a problem with that. PayPal may never get their OCC license, by the way. Hopefully, if it goes through, then they'll have more to hem and haw about. But there are multiple groups that have come together on the banking side, like the ICBA, which is the smaller regional and smaller mom and pop banks that believe that they're going to lose business because everyone's going to want to pour their money into the digital model. Clarity is going to work with something differently about that, and I can understand their concern. But in a world where you guys are holding our money and giving us nothing on our checking accounts while you make 4 to 6% for the privilege of being able to take our money and make interest off of it, what do you want me to tell you? What exactly do you want to hear? As Americans, as people who want to reclaim wealth in a world where we are being worked to death, prices are going up, and benefits for everything we're seeing here are going to the few. You're taking away and you're fighting the one piece where we could actually feel somewhat at peace that our money is actually doing something for us, rather than just feeding suits and other big purchases for the ultra wealthy. You expect the masses to be okay with that? I know what the answer is. In fact, everyone knows what the answer is. Like we've said previously on this show, banking is not going to die, guys. But brick and mortar banks and the bullshit model they have now probably will. To be replaced with these consortium style banks. The fact that they're going to allow everybody in this group, when I'm surprised the South Koreans really care. Why would they turn down money? Last time I looked, they need the money, right? I had another point. All right, let me go back to this one. So, the traditional model for stablecoins, you deposit cash through an on-chain entity like a CEX. If you're self-custodying in DeFi like we talk about in our content, you are the bank. You get to get all this on your own. I get to sit here, and I'll even show you. Vaults on Beefy. Stablecoins. And these are CLM vaults. Let's say we're just doing single. Granted, these are fairly inflated, probably not the best examples. But you're looking at, the idea that using Reservoirs, USD, and Stakehouse, which there's a risk curator vault, 56%. Granted, very low total value locked in this, but it's a thing. Let's just say that I go with CLMs and liquidity pools. 12% with USC and USDC digital assets, where you're earning yield. Last time I checked in my bank, in my checking account, I earn 0 on my money sitting there. At least you earn something with your money sitting here. Right? These are not the most beautiful examples, by the way, of where I'd put all of my money. In fact, I wouldn't put all my money in digital assets. You shouldn't. You should have a good diversified portfolio. That's part of our content as well. For those of you who are quote-unquote tits long into crypto, shouldn't be. Yeah, it's the best risk-adjusted return, but you should have a responsible portfolio where you are not counterparty to one type of investment bankrupting you if something were to happen. You got to have good diversification. You don't want to overinvest in any one thing. Have a good mix of investment things. Again, none of this is financial advice, right? It's common sense, if you ask me. Now, under the consortium model, which is not technically what the Genius Act provides, but it only allows certain people to issue stablecoins. Those groups will have coalitions where they're going to be sharing more of these here. Really, it's the whole banking model just on chain. You have 140 companies and banks along with 140 partners with an efficient zero-fee network. I will tell you right now, there's no way that they're going to allow this to go with zero fees, because it's a business. People are going to want to make money. Stellar Lumens here is not going to sit there and accept zero-fee banking. Now, groups like Sui Blockchain are doing zero fees on stablecoin transfers. That's definitely a marketing move. They'll be figuring out a way to make that money on the back end, whether if it's because they take the the funds and they put them in a dark pools without people's knowledge. I'm not saying that's what they're doing, but those are things that can all happen, right? The majority, and I don't think they show exactly where all the money's coming from, right? I don't believe that all of OUSD, and it's not going to be live until later this year. Uh, it's not all treasury bills, but it could be. But OUSD's collateral group is no different than this one, because they're promising the same things. They've been around for a while now. USDG powers real world finance, trading, cross-border payments, payroll, and much more. There are a lot of companies here that are part that do various things in DeFi, in blockchain, in digital assets, even traditional things. Some of them even do, well, there's some neobanks here, right? And most of these don't have U.S. exposure because they can't, because there's no Genius Act. I'm sorry, there's no Clarity Act. That was the other thing that the Clarity Act was supposed to provide. Good regulatory basis so that more companies could come over. Like, I mean, Coin Mena is a Middle East North African thing, so I don't see why they would be in the U.S., but regardless. We're going to see more of these groups, these for-profit groups, right? The other part that kind of eye-opening about this is just the groups that are in here. If anyone who's an OG, prefers the cypherpunk, the low tech, the just sticking with Satoshi's vision, quote unquote, right? Seeing groups of these big bloated banks and fintech and groups in here trying to have a digital asset. Is this specifically what Satoshi meant in his white paper? No, most likely not. But in a world where we need, and if you look at Balaji's nation state, network state model, we're going to need a new type of digital asset that can be used for payment that's anti-fragile, fast settling, borderless, and censorship resistant. So that's what the majority of these stablecoins provide. And yeah, so hopefully you got a little bit of an idea of what stablecoins are. Again, I did show you my Grok prompt because frankly this is all stuff that I've talked about over the last 5 years, and good to see that pretty much what I have in my slides are still exactly the same overall with regards to the main types of stablecoins specifically, right? In order to get to the decentralized darlings, things like MIM, things like DAI, things like USDS, or even USDE, we're going to have a big shift in the way that centralized issuers hold, or because we don't have decentralized issuers per se that are big at scale. And maybe we never will. It'll take a big shift in the paradigm of how money moves in order for that to be a reality. And I'm hoping we get there. I'm hoping we get there, at least in my lifetime. That's the hope, at least. Did want to give a big shout out to everybody at the arena who's watching. They generally like to interact, and I appreciate you guys. They're normally the ones following and reposting my threads. Of course, you can follow me on Twitter as well. If you found value in today's show, again, we do this show every Friday, 3 p.m. Eastern. Today at 4 p.m. because I had a thing come up. But this is our weekly show we've been doing since January of 2022, guys. We've been talking about this type of technology for quite a long time. I'd like to think we're pretty damn good at conveying that information and at the very least translating it for people who are not literate in this new language. If you like what you're hearing, please check out our free group, Total Value Locked, school.com, School.com/beacon. School.com/beacon. You'll get a message from myself and our CEO Andrew at Beacon DeFi. You can check out our free content as well as get information on how to get to our paid content as well for being in a group of like-minded individuals, one-on-one mentoring from myself, how to get into this space safely and securely, which is something that is the biggest thing that we care about, staying safe, staying secure. If you watch this show, you know that I'm huge on operational security because bad actors go after people that are uneducated and unprepared. And if you follow my content, you will be neither. So I please implore you to check us out. Check out the rest of my content and support. Please like, follow, subscribe. We're always trying to hit milestones. Shout out to our Beacon Mastermind founding members, our current members, as well as our Beacon Spotlight subscribers and our Beacon Challenge takers. You guys help make what we do possible. That's it for today, guys. Hope you have a great 4th of July weekend. If you're out here in the U.S., stay safe. At least where we are here in the area, Reed Timmer, one of the storm chasers, is in the area, so we're always looking to figure out. There's possibility of a tornado like in the next hour west of the area. If anything, a possible large gust front and straight line wind event is headed our way, so hopefully power stays on and all that type of good stuff. So have a safe weekend. Take care. I would be very wary about using leverage. And yeah, guys, stablecoins. Stablecoins are important. We've said this for years. And let me restate. Stablecoins are the killer app of crypto. Find me a better killer app in crypto. And when I mean app, I mean application of crypto, of digital assets, of blockchains, of fintech in this context. It's hard. Because it's easily the most relatable thing that most people care about. Having a stable coin that you can use to pay for goods and services, well-backed, protected, all that kind of good stuff. That's what stable coins provide. They're a very important pillar of commerce, development, and innovation in this space. And I welcome all of you to go out and try some today. Whether you're on Coinbase or other CEX, grab some USDC. You can use your coin. I use the Coinbase Visa all the time. There are other coins, and if you check out our content from the past couple of months, we have a whole bunch of different content on crypto cards, crypto perks, and all kinds of different things you can do to use your digital assets you have on blockchains and spend them in the real world, which is the most beautiful thing about being in a world where we have all of this ability to have great investments, return on investment, return on your equity, return your hard-earned money and capital. That's what it's all about, right? That generational transfer of wealth that people talk about. It's attainable, guys. And you can do it yourself. You can be your own bank. You can do self-custody. Have good operational security. We're here to help you along the way. Take care. Have a great weekend. 07. Beacons up. Banks down. I'm Chris, the DeFi professor. We'll see you next time. Take care.